Welcome to the latest Motley Fool scoreboard. I'm on Entrenched, and we've got longtime fools Toby Bordelon and Matt Frankel giving a 1 to 10 rating to a top 100 stock in the primary hidden gems database. It's Fair Isaac Corporation, ticker symbol FICO. Yes, that FICO. First, we'll rate the strength of Fair Isaac's business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Matt's at a 6. Toby, you're rosier at an 8.
Yeah, look, this is the OG of credit scoring, right? And they're still the dominant force in the industry despite recent competition. Part of that dominance comes from being legally and institutionally really embedded in the U.S. lending market. That's hard to change. It does look like it's changing slowly, but I think it's going to be slow if it does. Now, look, companies like Upstart are a competitive risk, and a bigger risk I think we're seeing now, the rise of AI may allow the bigger banks to bring all their underwriting tools in-house, which could hit FICO. But they're still the one to beat right now.
Yeah, I said a 6, and the general idea is that I think the business is a little more disruptible than Toby seems to. They are a dominant leader in credit scoring. Right now they're used in 90% of lending decisions. That's the statistic they always give. But recent policy changes have been more in favor of their competition. Now, for example, the VantageScore is the number 2. Mortgage underwriters are allowed to use that now. They previously weren't. Companies like Upstart are building their own models, which I'm not sure how big of a threat Upstart is, but there's a big AI threat that companies could just take this in-house. The FICO formula is a closely guarded secret. They've done a great job of that, but as AI models evolve, it wouldn't be inconceivable for companies like JP Morgan Chase to simply develop their own loss prediction algorithms. With the stock almost 40% off the highs, it seems like investors agree that this is not an invincible business.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Matt's at an 8, and so are you, Toby.
Yeah, CEO William Lansing has led the company for almost a decade and a half, and he's really helped focus that business on its 2 high-margin niches here, right? The credit scoring we've been talking about and software as well. He's helped steer the company through a period of technological change. Now, ultimately, that may threaten the business, but he deserves credit for keeping them relevant and profitable, I think, in this time of change.
Yeah, I'm pretty much in agreement. I don't have too much to add other than to note that during his tenure, FICO so far has produced a 3,440% total return. That's after that 40% drawdown I mentioned, and that's compared to 575% for the S&P 500. So strong growth in a variety of economic climates, some shareholder-friendly capital allocation. They bought back 34% of their shares since he took over. So I give it an 8. Pretty solid management.
For financials, a 10 is a fortress, a 1 is yikes. Matt's at a 7. Toby, you're at a 6.
Yeah, I would say they're good, not great. Now, margins are still high. Cash flow is strong. That's great. Debt's becoming a big concern for me, though. They have been aggressively buying back shares, which is good. They're funding that with debt, which I think is less good. This is a deliberate shift in the capital structure. And I honestly, I don't love it. I think it creates a more risky business going forward.
Yeah, I said a 7. Their margins are fantastic. 32% net margin. But as Toby mentioned, they have over $3 billion in debt. This is not a gigantic company. They're not cash rich, but that's fine if margins stay high and their revenue keeps growing like it has. That's a big if. But as mentioned, it's not a bulletproof business, and I think debt reduction at this point is a better use of capital than further buybacks.
And Matt, let's talk valuation then. How well will Fair Isaac's stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
I'm usually not the pessimist on these, but I'd say 0 to 5% and a safety score of 5. And the reason I gave it a 5, I give FICO about a 50-50 shot of being even a higher price stock than it is today in 5 years. If it can keep growing revenue like it has been doing, it could be a double or more. But the tides seem to be turning. I mentioned the VantageScore could be used for mortgage underwriting. Even Fannie Mae dropped its formal minimum credit score requirement. If for manual underwriting, there's processes that can happen. There's a good chance that FICO loses significant market share over the next 5 years.
Yeah, 5 to 10% for me. I'm a little more optimistic than Matt here. I think they're a slight market beater. But there are too many competitive pressures right now to see the company soar high as they've done in the past. Those numbers Matt has mentioned. Safety, 6 for me. Look, being the default metric in terms of that credit score, the FICO score has value. It does create some margin of safety. But it looks like that might start eroding here a little bit. So I'm not sure this is as safe as perhaps it once might have been.
Thanks to both Toby and to Matt. They've given Fair Isaac an overall score of 6.2 out of 10. That equates to a FICO score of just 641, which is fair. So that's above poor, but it's below good, very good, and exceptional. For Toppets, we have some debate. Matt prefers Upstart. He says it's not necessarily a big threat to FICO, but there's a clear trend toward alternative ways of valuing risk. And Toby prefers JP Morgan. He says that they're bringing credit rating in-house and that it's a real threat to FICO, not something like Upstart. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Airbnb. Till then, Fool on.